Imagine a £1,000 problem solved by a single sheet of paper. Want to see how the first true paper, money, was born and why trust can beat metal? Stay with me. This story begins in northern Song China around the year 1000. Sichuan was rich in trade but poor in copper. The region used heavy iron coins strung on cords that could weigh more than a traveler's pack. Merchants hauled sacks of coins just to settle a single deal. The friction of money itself was choking commerce. Local merchants tried a workaround that felt radical and obvious at the same time. Deposit your bulky coins with a reputable shop and take a paper receipt instead. That receipt was called jiaozi, and it promised redemption for a stated amount of coin later. At first these were private notes backed by the shop's reputation and reserves. They were accepted because they saved backs, saved time, and settled debts cleanly. The idea spread because the notes solved 3 painful problems at once. They were lighter than iron, safer than road travel with cash, and faster than counting strings of coins. A trusted slip of paper outperformed metal when the network around it was strong. But trust needs rules before it can scale. The government noticed and stepped in to organize the experiment. Officials created a jiaozi bureau to license issuance and set standards. Notes carried official seals, fixed denominations, and expiration dates to force periodic redemption. Holders paid small fees to redeem or roll notes, which funded the system and discouraged hoarding. Limits on total issuance were meant to keep paper aligned with real reserves. Now, a feedback loop took hold. More merchants accepted jiaozi because redemption was credible. Because acceptance widened, the notes got more useful in daily life. Because usefulness grew, more people deposited coins for paper. Money became less about metal and more about a shared promise everyone believed would be kept. That promise rested on 4 pillars that still define good money today. Convertibility told people what they could get back and when. Scarcity rules kept the supply from ballooning beyond backing. Enforcement punished counterfeiters and note issuers who broke the rules. And network effects made the notes worth having because other people would take them too. Paper, money, did not appear out of nowhere in this moment. Earlier, dynasties had credit instruments like flying cash that moved value for tax remittances. What changed under the Song was that paper became a general medium of exchange for daily trade. It was portable, countable, and recognizable enough to buy tea, silk, and salt without a cart of coins. Then came the cautionary half of the lesson. As war costs rose and coffers thinned, later rulers leaned harder on the printing plate. Southern Song introduced new notes called hizi and at times issued more than trust could carry. When issuance outran reserves and redemption discipline, prices rose and confidence slipped. Paper, money wins only when the promise behind the paper stays believable. So why does this 1,100-year-old story matter to your wallet in America today? Because every modern dollar is also a promise wrapped in trust and rules. You do not weigh your bills or your bank balance for metal content, and you trust institutions and enforcement. The dollar works because the network is enormous, the issuer has taxing power, and the legal system backs claims. That is the same triangle of convertibility, scarcity, and enforcement that made jiaozi work. It also explains why some monies fail even when they look shiny. If an issuer cannot or will not honor redemption, belief fades and discounts appear. If supply grows faster than demand and anchors, purchasing power slips. If the network stays too small, you cannot spend it when you need it most. Paper or metal or digital, money is only as strong as the promises people believe. How true Catherine the Jow's era. Your bank balance is a claim on a bank backed by capital, oversight, and deposit insurance. Your money, market fund, is a claim on short-term assets managed under strict rules. A stablecoin is a promise that depends on reserves, audits, and redemption at par. The question is always the same, and it is who promises you what, and how solid is that promise. Portability was the obvious win for Jawazi, and it still matters now. Speed and safety are why you use cards, wires, and apps instead of bricks of cash. Network depth is why a dollar buys lunch everywhere and a niche token might not. Design details are not trivia because fees, limits, and rules keep promises believable. When design drifts, trust slips, and money gets heavy again, even if it is printed on paper. The other lesson is that good systems embrace expiration and settlement. Song notes expired on a schedule so books would close and backing could be checked. Modern clearance does the same thing through batch settlement, capital tests, and audits. Closing the loop keeps paper and promises aligned with assets and reality. When loops stay open too long, risk piles up where no one can see it. There is also a human reason paper beat metal in Sichuan. People want to trade without friction, fear, or back pain. When technology makes it easier and rules make it safer, the better form of money wins. The winner is not the heaviest thing, but the most trusted promise with the widest network. Trust turns paper into money, and mistrust turns metal into scrap. History did not end with a perfect system in the song. Overuse and emergencies exposed how fragile trust can be under pressure. Later governments learned to pay paper with strongs, BT or DIT. That path leads directly to central banks, bank regulation, and payment rails you use every day. The path begins with a receipt that saved a merchant from lifting a sack of iron. So here is the quick playbook you can use from 1,000 years ago. Favor, money, and accounts with clear redemption and strong oversight. Prefer networks that are deep, liquid, and accepted where you actually spend. Respect supply discipline because easy printing is easy to promise and hard to unwind. And remember that convenience without credibility is a trap, while credibility with convenience is a superpower. This is education, not financial advice, and your choices depend on your situation. The lesson is not paper good and metal bad, and the lesson is trust with rules beats weight alone. Jawazi worked because people could turn paper into value on demand under credible limits. Your money works for the same reason, and it fails for the same reasons when promises slip. Build your cash habits around convertibility, scarcity, enforcement, and network, and you will feel the difference. If you want more origin stories of money and how to use those lessons to protect your cash today, subscribe now.